All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today. And in fact, there was actually quite a bit more news than this, but I sort of condensed it down to some pretty good stuff that will lead to a bright crypto future for us all, I suppose. And the first thing that I want to talk about is that MicroStrategy is looking to raise $400 million to buy even more Bitcoin. And I think we kind of all feel for them on this one because you go out and you buy some Bitcoin and then you're like, you know what? I think I could have bought more Bitcoin. So you buy a little bit more Bitcoin and you're like, I think I could use some more Bitcoin. So I feel for you on this one, MicroStrategy. And in fact, the video that I made yesterday, they had bought $50 million that day worth of cryptocurrency or worth of Bitcoin, which I suppose 50 million sort of today is not so much, but prepare yourself for that $400 million pump that's going to be coming soon. And $400 million is no joke. And this just goes to show, once again, that the institutions and the various companies and organizations, etc., are starting to really buy a lot of Bitcoin. And I think when PayPal really starts to get kicking in 2021, and Venmo and various other sources, that a lot of other corporations are going to see pretty quickly that investing into Bitcoin in some legal fashion is probably a good idea. And this is the way that everything usually goes. I mean, you can really put this analogy into anything. I mean, a good movie comes out and then three B grade movies come out with the like basically the same premise, but they're just cheaply made just to sort of cash in on this particular fad or whatever in movies. And MicroStrategy Incorporated is doubling down on its Bitcoin bet, saying Monday that it plans to offer 400 million of convertible bonds in order to buy more of the Bitcoin cryptocurrency. The proceeds from the offering will be invested into Bitcoin, pending the identification of working capital needs, the Virginia-based company said. MicroStrategy bills itself as a business intelligence firm, but has been doubling down on its capital allocation strategy disclosed in July, which includes investing up to 250 million in assets, including Bitcoin. MicroStrategy bought more of the cryptocurrency on December 4th, saying in a filing that it now has 40,824 Bitcoin in total. And the stock has doubled since the beginning of November, as the price of Bitcoin has also surged, but it slipped 3.3% post-market trading on Monday. So again, huge buy-offs, and in yesterday's video, if you guys didn't watch that, you probably should, but Grayscale is now up to, I think, $10.4 billion, or it might be $10.6 billion in Bitcoin. So yes, the institutions are going to buy up all of the Bitcoin before you do. So better make it fast. Moving on, Shark Tank's Kevin O'Leary is ready to put 5% of his portfolio in an SEC-approved Bitcoin ETF. So that's the one big thing we're missing. I mean, we got backed futures, we got the CME futures, which is sort of just paper-traded Bitcoin futures, and it's kind of irrelevant. It kind of helps, kind of doesn't. But so we have those. We have exchanges. We have the institutions like Grayscale. We have these big companies like MicroStrategy buying in. We have PayPal now, and soon to be Venmo. And various other ways to spend your Bitcoin or to buy Bitcoin. But the one thing we don't have is an ETF, an exchange-traded fund, which is essentially a group of stocks that are bought and sold once per day. So instead of just like the stock market where you're just selling and buying stocks, or you're flipping them back and forth like you could with cryptocurrency, an ETF is kind of like a mutual stock fund, except I think ETFs you can actually trade multiple times, whereas the mutual stocks you can only trade once a day. They sort of just either buy or sell once a day. So it's kind of like that. So it's a big group. So I'm not sure how a Bitcoin ETF would work necessarily, because it's generally like a big group of stocks that you're buying, similar to mutual stocks, but you can day trade ETFs. And so I wonder if they would make it with like Bitcoin and Ethereum and Litecoin and like a package or something like that. But either way, we don't have an ETF yet, and that would be huge because people like this guy want an ETF. So Canadian investor and television personality Kevin O'Leary discussed his view on Bitcoin last week on a podcast hosted by Morgan Creek digital partner Anthony Pompliano. O'Leary has been a Bitcoin skeptic. He told CNBC in May last year that Bitcoin was worthless and a useless currency, even though there are videos of him in like 2013 saying that he's sort of a Bitcoin bull, but I guess he kind of flip-flops around. Why not? Stating that to him, it's garbage because you can't get in and out in large amounts, which is just definitely untrue. It's totally untrue. There's a lot of black market, sort of like off-market sales that you can use. I think Kraken has one. I think Coinbase has one where you can just sort of buy a whole bunch without affecting the actual price, or sell a whole bunch without actually affecting the price. So, yeah, not true. While he still has the same concerns, the Shark Tank star said that he is not against Bitcoin. I do own a small amount of Bitcoin, he said, adding that he bought the Bitcoin because a class he taught at Harvard University challenged him to get involved in cryptocurrency. However, he's worried about Bitcoin's volatility and the regulators' adverse response to it. Every time I talk off the record to the regulators, because I talk to them all the time for various reasons. Oh, do you? Kevin O'Leary. They're a little squeamish on Bitcoin. They are not quite there yet. And for, some ways, I kind of don't blame them. It is pretty volatile, and, there's been, hundreds of years of stock trading, essentially, that is sort of been perfected, and Bitcoin not so much. But the ETF will come sooner or later. O'Leary added, when I can get this thing regulated so that I can put millions of dollars into it and know that I'm not off the side in any way, I'm not breaching anything, and it would be stable. But stable Bitcoin would be such unfun Bitcoin. If that was the case, if tomorrow morning we woke up and the SEC said you can create an ETF with Bitcoin, we think Bitcoin is a legitimate, payments system and store of wealth, not only would it go up, but you'd have a lot of people like me investing in it. So he wants it to go up, but he wants it to be stable. Does he mean like legally stable or like price stable, so that it doesn't just bomb in price? But if you want it to go up, you're going to have to face those bombs in price from time to time, them dumps. If you want the pumps, you're going to have them dumps with it. He elaborated that if that happens, I'd say, okay, I'm going to give a 5% weighting, so I don't really want a significant portion of my portfolio having that amount of volatility. He said he prefers to invest in an ETF, and many of his investments are in ETFs. And as an investor who believes in diversification, O'Leary reiterated that it bothers him a little bit that in the crypto space, you have to be very concentrated to get these returns in one cryptocurrency, Bitcoin. And again, I don't think he has the exact grasp on it, because that's not necessarily true. If he means like altcoins, like buying altcoins in 2017 sort of deal, and they haven't got to the price, back to their price yet, I suppose. But in terms of if you smart buy cryptocurrency like Bitcoin or something like Ethereum, and there's a good number of other ones that are just not total S coins, basically, then it's not so much of a problem. So I don't think you really need to concentrate completely. But, hey, Bitcoin's Bitcoin. Moving on, rebrand of Facebook's Libra association to Diem hits the snag. So, again, my wife and I had a beautiful baby girl on November 15th, and it was about that time that Facebook decided to change Libra to the word Diem, as if anybody just wouldn't know, right? Because basically Libra, if you guys don't know, Facebook was trying to make a stable coin called Libra that they would be able to use on all different kinds of groups within Facebook, and partner with a whole bunch of brands. And basically every politician in the world, not just the United States, thought it was the devil, because it's true. So it's like the one good thing that politicians do from time to time, and basically denied it virtually worldwide. So they decided to rebrand it Diem. That'll get them. They didn't like Libra. Should we rebrand Diem? How about Diem? So this is terrible. So I sort of missed this news as I took a couple weeks off, and I didn't really make any videos for a while. So there's that. But it looks like someone at Libra Association forgot to run a Google search before it rebranded to Diem Association, or thanks to the backing of Facebook, it could probably afford to not care. Probably true. A London-based fintech startup by the name of Diem is contemplating legal action against Diem Association and or Facebook over the use of the Diem name. I suggest they just sell it to Facebook. $1 billion, right? And then just screw your fintech startup company. Go live on a yacht in the middle of the ocean somewhere, right? But fair enough. That would just be my legal. That would be my thing. Give me let's go with 100 million. Cut it down to 100 million. Not a big deal, right? Facebook over the use of DM names. So they're contemplating legal action because basically Facebook didn't bother to even check. According to reporting from a European fintech publication, DM Association, formerly known as Libra Association, is the government's body for the blockchain-based DM network, formerly the Libra network, which failed absolutely miserably. But I think this is going to actually go through. Maybe not as DM. Maybe it will, maybe it won't. But I think eventually this is going to go through. I think that as long as they just rebrand and change the way they're going to do it, I think eventually, like through lobbying or something like that, this is definitely going to go through. Like, this is going to be a thing sooner or later. Libra rebranded itself last week, saying DM denotes a new day for the project. Oh, it's so cheesy. Oh, it's so bad. Ugh, man. Corporations are so out of touch. Ugh. Ugh. And it's Facebook too, you know what I mean? So like everybody's on Facebook. I think they have like literally like 2 billion plus users. So basically like a majority of the planet. Technically, I don't know, whatever. But they're just so out of touch. Do you know it's a new day for the project? It's just a corporate lie. It's just nonsense. God, man. Oh, it makes me cringe. A new day away from the negative press that dogged Libra. I'm sure it's going to be totally different this time. Launched with loads of publicity in June 2019, the Switzerland-based nonprofit was designed to govern the Libra network for Facebook, which would like to integrate digital currency payments with its software offerings, including WhatsApp. Things have been tough for Libra DM. It sure has. In a single day in October 2019, for example, partners eBay, MasterCard, Stripe, and Visa backed out of the project. Several of them cited regulatory issues and the fact that they were getting such bad press. They're like, I don't want any of this, but regulatory issues. Fintech startup DM uses an algorithm to price customers as items. Customers can then sell things to DM and get cash. It's sort of like a Carvana, but for a wider range of items. As a small startup, we are concerned that customer confusion resulting from Libra's actions will significantly impact our growth, DM founder says. The other DM, the current DM. So a major investor in DM, which has thus far not had a seed round, told Sifted, it wouldn't have taken that much effort for Facebook to find out if there's another DM in financial services. They obviously took the view that we could just crush them. We're Facebook. They literally said that. The startup reportedly plans on filing a cease and desist with either Facebook or the DM Association. Let the carping about DM continue. Oh, whoever wrote that on the end, good for you. However, again, man, if I was DM, $100 million, right? And we'll just give you the name and back off. I don't mean to sound, does that sound like a simp? I mean, $100 million. I don't know. Either way, moving on here, Biden administration likely to embrace crypto to make U.S. more competitive. So, with the U.S. presidential election coming along, it's pretty looking like Biden has won the election. I know. Everyone's like throwing their chairs and smashing out windows and stuff at that whole idea, right? But basically, get real. Biden pretty much won. So. I know there's like some controversy. They're doing like some recounts and stuff like that, but those are pretty much failing miserably. So let's just go with it. Well, talking to CNBC, Squawk Box Circle co-founder and CEO Jeremy Allaire shared his opinion that the Biden administration is likely to be friendly to cryptocurrencies. Then, when asked by the anchor whether the Biden administration is going to be positively predisposed to the crypto industry and broaden it or turn it into a tightly regulated sphere, Allaire shared his positive expectations. He opined that the new president and his administration will ultimately be supportive of crypto because this signifies an infrastructure change as great as the commercial internet was initially. Allaire stated that the U.S. authorities are likely to be focused on infrastructure changes that will make America more competitive. Maybe. There's a real chance to use crypto as America's growth strategy. In his Twitter thread posted on December 6th, Jeremy Allaire described the current situation in crypto industry regulation as a complex one. There are many players in this area, and they all have an incomplete understanding of each other regarding blockchain and crypto, including big banks, tech entrepreneurs from Silicon Valley, far right and far left politicians, and so on. If banks want to put extra limits on crypto, tech companies wish to take advantage of the innovation and develop it further for the good of the whole world. Failing to understand each other's intentions and goals may lead to improper regulatory choices. Nearly all of these groups don't have a full understanding of each other, and in fact lies a huge risk of poorly considered policy and regulatory choices. So I really don't think the U.S. could ever actually ban Bitcoin or exchanges or anything like that, because there'd be a lot of lost revenue, and the fact that everybody would have to sell off and they probably wouldn't get their taxes from it. So I think it's here to stay in that regard, but it's more like we need more regulatory certainty in terms of what companies can and cannot do. Like right now, a company just can't make their own token because then it would be considered a security. And is it really a security? So based on a 1930s law that shows if something is a security or not, it's basically if you buy something with the expectation that it's going to rise in price, it is a security. And if that law was removed, or at least in terms for the crypto space, we would see an unbelievable amount of tokens just poof into the sphere. I mean, there would be Nike coin and Pepsi coin and McDonald's coin, and like basically every corporation would have their own coin very, very quickly, because right now they can't, because it would be a security, because you would expect it that it would rise in price or lower in price, thus a security. So that's one problem. Another problem is the SEC sort of refusing to make a Bitcoin ETF. And as you've seen there, Kevin O'Leary and many, many other very rich investors would love a Bitcoin ETF because that is what they're used to, and that's what they want to buy Bitcoin with. They don't really want to go out and buy a bunch of Bitcoin any other way. They want to use an ETF. And that would be super, super huge for Bitcoin. Another thing about this that is not mentioned in this article at all, but the Department of Commerce candidate for the Biden administration is Andrew Yang, and he was a Democratic presidential candidate earlier in the year. And he was on Joe Rogan and various other podcasts, and he was the guy that with the $1,000 a month UBI, like the Universal Basic Income guy. But aside from that, he was actually really pro Bitcoin and cryptocurrencies, and he used to talk about it quite a bit. So with him as a Department of Commerce and various other, sort of, I guess, progressive individuals in the new cabinet, there may be some talks about cryptocurrency and how it could benefit the world, or at least the United States. So moving on to some interesting news that's ironic because I actually have CoinMarketCap up right now. CoinGecko looks to overtake CoinMarketCap with huge uptick in traffic. So CoinGecko is starting to win pretty quick here. When you break down the website traffic that each aggregator receives, a much stronger picture emerges. CoinMarketCap shows notable stagnation while CoinGecko is witnessing mass acceleration. Revisiting web traffic from May of this year shows that CoinGecko only received 8.75 million monthly users compared to CoinMarketCap's 32.8 million, a 375% increase in favor of the latter. As 2020 progressed, both platforms began to see an increase in users, most likely due to the favorable price increase since the pandemic-induced crash. Although web traffic for both has since increased, CoinGecko has been receiving it at a much higher rate. The website's peak for the year in July, according to the total number of monthly users, CoinGecko brought in 27 million interactions compared to CoinMarketCap's 46 million interactions. As the bigger platform, CoinMarketCap brought in more users at the peak, but CoinGecko increased its user growth by a vastly larger percentage. What follows next may speak to the loyalty of the platform and what it can offer users. Following this peak, there was a decline in user traffic on both sides, but CoinMarketCap was hit significantly harder, possibly due to a management shakeup. According to SimilarWeb.com, since its peak web traffic, CoinMarketCap has dropped to 29 million monthly interactions compared to CoinGecko's 22 million monthly visits. So CoinGecko doing a lot better. Some argue that it's not that CoinMarketCap is doing anything wrong, but more about what CoinGecko is doing right. Indeed, decentralized finance has likely played more of a role in attracting users in 2020. Total value locked has increased from less than 1 billion at the beginning of the year to now over 15 billion. Many of the smaller, and more obscure DeFi coins are not listed on CoinMarketCap. CoinMarketCap is generally pretty slow. And in fact, over the past couple of years, I have noticed that if I've seen a new coin or like a new abbreviation of a coin that somebody is talking about, and I'm like, I don't know what that is. Like, I don't know what ZTR is, right? Or some random abbreviation. And then you check it on CoinMarketCap and you don't see anything. So the only option is to bring up CoinGecko and type in that abbreviation to find that coin or something like that. And it pops right up. So CoinGecko generally lists coins much faster, and with the DeFi market, it definitely needs that because these coins are just sort of popping up out of nowhere. Some in the crypto community also see Binance's acquisition of CoinMarketCap as a downside in terms of decentralization. It's unlikely that CoinGecko will be the new market leader before the year is up. However, if DeFi continues to grow from strength to strength, that crown may topple in 2021. So moving on to CoinMarketCap here, 19,171 Bitcoin, slightly down from yesterday's video. It was like 19,200. However, with the $400 million strategy to raise for MicroStrategy, which is weird, to buy additional Bitcoin, that's quite a healthy chunk of Bitcoin. And Grayscale still buying en masse as well. PayPal to fully release the total platform, because right now you can't actually send the Bitcoin or you can't actually like use the Bitcoin for sale in PayPal, and with Venmo picking it up as well. I think 2021 is going to be a big year. It's just a matter of what December and January is going to bring us. They're usually pretty grim months for cryptocurrency, as people typically sell off and stuff like that for the holidays and whatnot. So we'll have to see how December and January fare for cryptocurrency this year. But everything looking pretty good. Quite a bit of red, but nothing down too significantly. I mean, even XRP is still at 60 cents there. And again, the last video I was talking about how XRP had rose in price pretty dramatically. I mean, we were at like 20 or 30 cents and then all of a sudden 60 cents. And that's because of the Flare airdrop. And you can put it on various exchanges, or I think like ledgers and various other ways to get that Flare airdrop. So it's probably a lot of people buying into XRP to get the Flare drop and then possibly selling the XRP after December 12th when the snapshot is taken. So just be careful with your XRP. If you're going to get that snapshot, just be careful with the exchanges on that date of December 12th, because there may be a big dumpening, which I hope not, but there may be a big dumpening just because I think a lot of people bought XRP, not because there was a partnership or really good news. It was just because of this Flare airdrop. But that's all I have for you guys. Make sure you like and subscribe. Share the video. Helps me out a lot. My social media in the description below. And as usual, I will see you guys next time.